Hello and welcome. I'm Natalie. Let's talk about money. Today, we're actually going to talk about delinquent property taxes. And this came across my screen just randomly as a trending topic, which I've not heard anyone talking about delinquent property taxes, but it was interesting to me. So basically, just imagine owning a home only to lose it because of unpaid property taxes. It sounds extreme, but it happens, and it actually happens more often than you might think. When you pay off your mortgage, you still are responsible for your property taxes and if you have insurance, which if you own a home, you need to have insurance because if something happens, and it does happen, it happened to me, you need insurance to help you out or to cover any problems you may have. So let's start off with just the basics. So first, what are delinquent property taxes? So delinquent property taxes occur when property owners fail to pay their property taxes by the due date. Now, most people have their property taxes rolled into their mortgage. So most people don't think about this at all until the property taxes go up, and then that means their mortgage payment also goes up coincidentally. But most people don't think about their property tax bill or having to send it in or anything because it's rolled into their mortgage. Once you've paid off your mortgage, however, that you don't have that anymore. So you are responsible for paying. Now, the due dates for property taxes, they do vary by state. So some have installment type plans where you pay twice a year, like once in the spring, once in the fall. Others want just one annual payment. And then of course, you should check with your local jurisdiction just to make sure or to see what guidelines they have or what rules they have or what due dates they actually have. Because it's better to know and follow along than just guess or assume. If you would, go ahead, give the video a big thumbs up. Leave a comment down below. Are you a person who owes property taxes or is it rolled into your mortgage already? And then also give the video a big thumbs up. No, subscribe. You got to subscribe. When you subscribe, hit the bell so you know when the next video comes out. All right, let's get back to it. Now, failing to pay your property taxes can lead to some severe consequences. So first, there's, of course, going to be penalties and interest. And so in Texas, I live in Texas. So in Texas, for example, interest starts at 6% and increases by 1% each month up to a maximum of 12% interest. So, of course, penalties can also accrue, typically starting at 1% of the unpaid tax per month, and then increase depending on the length of the delinquency. So if you're delinquent for 2 months, of course, that would be much lower fees and all of that, versus if you're delinquent for 6 months or 12 months. And then next is something that you may have seen if you watch YouTube a lot, or if you watch TikTok or Instagram, there's always these little tax lien schemes, right? So there are tax liens that can happen. So a tax lien is placed on your property, taking precedence over most other liens, including your mortgage. So timing varies by state, but can be as soon as just a few weeks to several months after the delinquency. So a tax lien prevents you from selling or refinancing your home until your taxes are paid. Now, what you see on the interwebs, are these programs where you are buying homes through a tax lien because the owner did not pay the taxes. And so now you can buy the home using just the tax lien. I have never looked very deeply into this because the ads that I've seen are so scamish that I just lost interest. But this is an actual thing where people do come across homes just by paying the tax lien that's on them. So that is an actual thing. And that's kind of the next purpose here is tax lien sales. So the government may sell the tax lien to investors who then pay the overdue taxes and then gain the right to collect the debt, often with interest rates ranging from 4 to 36%, just depending on the state. So where you live depends on how much those rates can be. And then, of course, one of the most popular, one that we hear the most about are foreclosures. So if the debt remains unpaid, the property can be foreclosed upon and sold to recover the owed taxes. So even worse than a tax lien sale is the foreclosure where you actually do lose your home and you do have to move out. Now, sometimes there are redemption periods. So many states actually offer a redemption period, allowing property owners to reclaim their property by paying the overdue taxes, interest, and penalties, which is a very good benefit. So if you have that opportunity to pay that off, that is priority because that is your home. So that is a priority. Now, of course, each state has its own rules, so it is important to check with your local jurisdiction just to verify what you need to do and also when you need to do it. Some states, after 4 weeks, they're wanting immediate payment. Other states, 4 months. Some states, a year. So it is up to your local jurisdiction on what they require in terms of the payment of your delinquent property taxes. This is basically an ongoing payment to your state forever. There are ways that I've seen that you can get out of paying property taxes, and that's not something I'm focusing on here because I'm talking about delinquent property taxes. But that is a thing. So if that's of interest to you and you no longer have a mortgage, but you still have to pay these $5,000, $10,000, $15,000 taxes every year, that may be something that you'd want to look into. So there are just some natural steps you can take, to avoid delinquent property taxes. Obviously, the goal is to pay on time. So set reminders for your tax due dates and maybe even set up your own personal escrow. Like when you have a mortgage, the mortgage company will typically have an escrow account, and they actually call it that, an escrow account, where their part of your payment is going into this escrow and is building so that when your taxes are due, or your insurance for that matter, when that is due, then they take it out of that escrow amount. So it's not a big chunk of money all at once, but they've been collecting it over the course of a year. All right. And this is something that's a great idea that you can do on your own in your own bank account. This is something that I have one of my bank accounts for, is for my property taxes and my income taxes. And so every month a certain amount of money goes there, and I don't touch it. I don't use it. I pretend that account doesn't even exist because it just builds enough money to pay my property taxes and my income taxes because I typically owe every year. So it's important to have the money ready when it becomes due, especially if you don't have a mortgage. If you're lucky enough to have a paid for home, ensure that you are saving for those taxes. Or if you're new to paying off your home, maybe you may not realize that you are still responsible for paying those taxes. So make sure you set yourself up so that you can continue to be successful and pay your taxes on a regular basis. And then also, if you do get into a situation where you are struggling and you are having trouble to pay your bill, contact your local tax office and or your financial institution too, and see what options are available. Again, states vary, so each state may have their own programs that they have set up, where you can set up payment plans, or you can defer your taxes for another 6 months or 3 months or whatever. There are programs out there that can help you. The government just doesn't want to steal your money. They do want your money, but they're not going to steal it. So typically they will work with you on how you can pay back your property taxes. Similar to if you owe income taxes, they'll work with you on how you can pay that back. So understanding and managing your property taxes is crucial to protecting your home and financial well-being. You don't want to think that you're debt-free and you have no bills, and then all of a sudden you have a $8,000 tax bill, property tax bill in your mailbox. You don't want that. So be sure that you're prepared. Be sure that you know all the rules in where you live. Naturally, if you live out far in the country, you most likely will have much less taxes than someone who lives in the city or in a suburb. Typically, that's the way it goes. My tax bill almost did a tenfold when I moved from this little town into, it's not even a city, I would barely even call it a suburb, but it's just outside the city. And so the taxes here are quite a bit more, almost 10 times more. How much are they? Probably 8 times more than they were in the small home that we had outside of the city. So keep all of these things in mind so that you can set yourself up for the future. And also remember to invest in yourself today so you can make a difference for others tomorrow. Go ahead, give the video a big thumbs up. Leave a comment down below. Be sure to subscribe. When you subscribe, you should hit the bell so you know when the next video comes out. I thank you so much for stopping by today. Y'all have a great one.